Hello, welcome back to the Laptop Trader channel on YouTube. Welcome back to our community. I'm just here to share my experience and give back to the stock investing and trading community one video at a time. And good luck. My email contact, laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for information only. Please seek qualified help if you need help investing. So start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in markets. So here's our September agenda. I'm going to go over some charts about the stock market update using charts. A few of those charts will pertain to interest rates, inflation, and the economy. And then why was there a sell-off in tech? I'll discuss that. And that's going to be kind of the update for this month. So hopefully you find it educational. Let's get to some charts. Use a basic charting service called barchart.com. We can go to our watch list. Go to this ETF list that I keep track of. So let's look at some of these charts. This is basically a chart of Bitcoin showing that Bitcoin has kind of went sideways for 3 months, but recently sold off here over the last couple weeks and is approaching low territories over a 3-month period. So that's just kind of what's been going on with Bitcoin. If we look at a larger chart, or I should say a larger chart, I should say a longer term chart, we can see the sell-off in Bitcoin has been taking place since give or take March of this year. So try to make a new high, couldn't. Try to make new highs in this area, could not make new highs. And the high for Bitcoin this year was at about 73,600. Currently it's at 55,000, just over 55,000. So even though it doesn't look like much, because Bitcoin is so expensive, it is quite a sell-off for Bitcoin investors. Versus the general market, the S&P 500, tracking ETF, we use SPY, versus SPY has been an uptrend, basically during the same period. So we did have a sell-off in the S&P starting on July, middle of July, and then it came basically right back up. So that would be 100% retracement, and then it's been selling off this last week. So it looks like S&P 500, we're entering into a time of September, which is seasonal for selling off. And this week we had selling. I would expect this to continue on and maybe test this low, or at the very least test this 531 area at the bottom of this candle 4 weeks ago. So that's kind of my expectation in SPY. Not making new highs in September. The Q index, which tracks the NASDAQ stocks, is also very similar. The main difference with this chart is after the new high in the Qs back in July, first week of July, we had this sell-off. And then we had a retracement up about, I'm going to call that about 60-70%. And then the last 2 weeks, this index has also been selling off. So the tech stocks have been selling off. I think we'll talk a little bit about why that is. It's something called rotation. But let's just look at a few other indexes first. This is the broader base Russell 2000 ETF, symbol IWM. Made a new high at the end of July. Since then, it sold off, came back about 80%, and then it sold off over the last 2 weeks. So this is a more general stock market overview, more broad-based. So these small mid-cap companies have also been under pressure selling off. The Dow Jones stocks, the top 30 stocks, have actually held up pretty good over the last 4 or 5 weeks. They did sell off this week, but level to watch on that would be this 404 area or 405 area to as maybe kind of a support area, minor support. If that breaks that, I would expect it to test maybe the 385 or 390 area if continued selling takes place in those stocks. That's just a general market overview. Transports have not had a great year. A lot of selling in transports. We had some buying here between in August, but since then, looks like transports are going to roll over. So that's also not a good indication for the economy. The volatility index has this big, spike in the first week of August, which was really unusual. There's a way to trade that, but I'm not really going to get into it in this video. But now the VIX is actually starting to go up again. It's at 22, which is slightly elevated. Over 30 is really high, actually. If this continues to push up, I would expect the S&P 500 stocks to continue to sell off. Again, this is the fear gauge or the fear index. Mid-cap stocks just kind of holding their own in a sideways trading range. Again, selling off over the past couple of weeks. And small cap stocks have also been selling off over the past couple of weeks. So general pressures on stocks is the theme. And September is known for being a weak month anyway. So what is doing good right now? Well, right now, financials have been doing okay as interest rates have come down. I believe this has benefited financial stocks. Healthcare has been doing okay. Again, in this little uptrend since around April and May. Although this week there was some selling in healthcare stocks. Technology has been under pressure. You can see there, very similar chart to the NASDAQ. Utilities, again, interest rate sensitive, have actually been this uptrend since around April and May. This is materials going sideways. Communications sector has been under pressure. It's not really not on a downtrend yet, but kind of has this double top and a red bar this week. And consumer staples have actually been this uptrend. So consumer staples, things that people buy on a regular basis, has been an uptrend. And then real estate, which is also interest rate sensitive, has been in an uptrend here since around April and May. So there is some sectors doing okay, but it's the defensive sectors. It's not the growth sectors. The tech sectors have been selling off. Tech stocks have been selling off. And it's because investors are taking profits from, areas such as something like semiconductors, symbol SMH, and taking those profits and moving those profits into more traditional investments. So let's take a look at another reason why I think that's happening right now. And if I just go to a different list I created, we can see these charts. I'll give you 2 examples here. This is a real estate company called Prologis Inc., symbol PLD. See this red line? This is a longer term moving average. Was in a downtrend, right? It's starting to curl up because the price is pulling that up. Because price is moving up in the short term. So let's take a look at a little bit longer term chart of Prologis, and you'll see that yes, this is in a downtrend and then a sideways trend, and now it's starting to turn up. It's had this bottom here, a second bottom, and then a third bottom. You can see the volume coming into this stock. Let's take a look at a few fundamentals on Prologis, and this may help explain why I think this is happening. So you can see the earnings per share growth versus the previous year was negative, so that's not good. But versus the previous quarter, earnings are starting to grow again for this company. They pay a dividend. Their annual dividend is just below 3%, so that's not too bad. And the ratios, the P ratios come down, the PEG, or price earnings to growth ratios, come down. They do have a return on equity, they have a return on assets, but they have a very nice profit margin, a 38% profit margin. So I think that's one reason why some money has flowed into this company. Nothing to really write home about here with this company, nothing super impressive, but a stable real estate investment. And when we look at this long-term chart, you can see large investors have basically put a floor in around that $100, $99 mark. When price gets there, buy. And you can see that on the chart pretty clearly where there was buying here, here, and here. Why? Because investors find value at that price. And well, at today's price, it's paying just under 3%. When price was around $100, that dividend yield probably goes up to maybe 3.5%. And for some investors, they really like that. Now, as interest rates come down, that means yields on things like savings accounts and money market accounts will also come down. So investors are looking for places to put their money. And this could be one of those places. Again, this is not investment advice, but I'm just using some common sense. When we look at another large company, UPS, large shipping company, we can see this has been in a downtrend since roughly March of 22, after the pandemic. And as prices come down, investors may start to find value in UPS. Okay, so let's look at, even though this chart is still technically a stage 4, we're starting to approach on a technical basis here some interesting levels, such as this large breakout candle, this area of consolidation, and then this 5-year low at around $82 to $83. So let's take a look at some of the fundamentals on this company. Again, I'm just using common sense and why I think money is rotating out of these other areas that have been essentially overbought, for lack of a better term. But they have a fairly low price earnings ratio, 17.5. Going forward, that looks lower to 17.15. Their price earnings to growth is at 1.8. My understanding is a PEG ratio, a good number, is below 1, but still 1.8 is not out. It's not super high. They have a very nice return on equity, over 35%. My understanding is that over 20% is very good. They have good return on assets and a fair profit margin. So again, when we're looking at numbers and value, this company is offering some value. Previous year, they had gone backwards on earnings growth, but this last quarter they had a nice bump in earnings per share growth. And then going forward, they pay a very nice dividend rate and yield. So today's current price, it's paying over 5% yield. So when value investors look at that, they're like, oh, that's very good. I could get a yield on my investment. And if the price of UPS starts to go up again, I will realize not only that dividend, but I could also realize some appreciation in my stock itself. So that's kind of the best of both worlds for investors when you get dividends, growth in dividends, and growth in the share price. So that's why investors may start to look at this as a good value stock going forward, and why they would take money out of something more risky, with something like AMD or something like NVIDIA or Microsoft or whatever, because of those high dividend yields and value. So that I think should explain to you guys a little bit about why investors who've looked for other stocks in other areas and other sectors at this time. And to me, it makes sense. But if we just look at a few more, we can see that there's other stocks that are still moving up, even as the market pulls back. And I can show you a few of those right now. Checkpoint Software is still in an uptrend. It's pretty good for a software stock versus something like Google, where money has come out of Google in a downtrend. Okay. We can look at, here's another considered a stable value stock. AT&T, symbol T, is in this new uptrend. Okay. Just made a new high on Friday as the market was selling off. So that would be some relative strength in something like AT&T. We can check real quick what their, what is their dividend? Well, their dividend again is paying over 5% dividend. So investors, when you buy at today's price, you kind of lock in that dividend. As long as the company doesn't cut the dividend, you get that over 5%. I think that's why money is flowing into these companies. Let's take a look at a few more. Maybe something like Hershey. Yeah, it's kind of in this new uptrend, kind of price is starting to trade above this longer term red line, this longer term moving average. So maybe money's flowing into Hershey. We could take a look at maybe some others here that I recognize. Let's take a look at MGM. That's like a famous casino company and gambling company, so that's more of a downtrend. So consumers are not gambling as much as they used to. Oil, here's an oil stock, MRO, Marathon Oil, and that's more of a sideways trend right now. Verizon, another big mobile service provider. Not a great looking chart. How about a bank, Wells Fargo Bank? Not a great looking chart. How about Tesla? Tesla, not a. It looked good until it didn't. So this kind of went up, then came all the way back down. Again on Friday, large red bar on Friday for Tesla. That doesn't look that great. How about something like Fiverr? Kind of a tech help company. Just kind of a sideways trend there. See what else we can find. I don't recognize that company. Could also play stuff like this, wheat and corn as a seasonal play with harvest coming up. That's an a bottoming pattern. How about Coca-Cola? That's considered a stable company, right? And a short-term uptrend right now for Coke. So that's kind of setting up to where maybe that could be a buying opportunity for Coke. How about eBay? eBay was on my list for the last forever. And now that's starting to go into this uptrend. I like this price action here where it's just kind of sideways, fairly tight. Again, as the market has sold off, eBay has went sideways. So that's relative strength in eBay. Let's see what else I can find that makes sense. Here's a big company called, used to be Kellogg's, now it's Kellanova, and they are being bought up by Mars Company, M&M Mars, and that's, when you see this type of price action, that usually indicates a buyout of some sort. So if you ever see that real tight price action like that, that's generally like a merger or a buyout. and that's why that happened on that chart. But yeah, so that's two big companies merging, M&M, Mars, and Kellogg. How about Cisco Foods, big food delivery company, kind of the short-term uptrend. So that's good for those guys. So there is stuff available that will present itself at different times as whether it's a good time to buy or not. How about McDonald's? Even though McDonald's is something that I don't consider a consumer staple, I consider it more discretionary, but Wall Street considers McDonald's a very stable company. So that has been the short-term uptrend for McDonald's. Maybe finally, how about 3M, another stable value type company? Breakout on earnings, sideways price action. That looks really good for 3M. Let's take a look at their data and just see what their per share. We're paying over a 2% dividend. That's weird, 237% payout ratio. I don't like these numbers. Earnings per share growth versus previous quarter and previous year. I don't like those negative numbers. Don't see anything crazy there. Price earnings forward jumped up a little bit too much. So I think that's probably too far too fast for this company. They do have a huge return on equity. For some reason, negative profit margin. So I'm not sure about those numbers, how accurate those are, but I know 3M is considered like a dividend king. So maybe somebody's finding value down here, and then that caused the price to spike for whatever reason. But I would wait on that. I would actually see if price comes down on 3M to a better level. But anyway, that's it for now. Let's go back to our agenda. Did I miss anything? Inflation. Let's talk about inflation a little bit. I explained the sell-off in tech, I think, where money rotates out of tech into other safer areas such as healthcare and consumer staples, long-term value companies. What's going on with inflation? Well, it has come down, no question about that. And let's look at interest rates. This will be the last charts we look at. Let's look at this list. I want you to understand one thing about inflation. Inflation in an economy as diverse as our economy is in the USA, with a paper currency, inflation is always there. That's what I want you to understand. It's always there. And let's take a look at, here's a dollar index chart. So over the past 3 months, the dollar has been in a downtrend, actually losing value on your dollar. So that's interesting. Remember, they have a target inflation rate of between 2 and 3%. So while inflation did spike a couple of years ago, I believe it got to over 9% or something like that. It's come down, but it's still there for consumers. And inflation really hurts poor people the most. The people on the lower rungs of an economy really get hurt the worst by inflation. If we take a look at, I think this is the 2-year interest rates. No, that's an ETF. I forget some of my symbols sometimes. So here's a 13-week Treasury bill where we've had this decline in Treasury rates. So again, as Treasury rates come down, it becomes a less attractive investment, which is why we're seeing movement into these other companies that pay high yields through dividends. So as this interest rates come down, that's going to make stuff like treasury bills and savings accounts and stuff like that less attractive. It's still pretty good at 4.9. That's not bad. I think this is 10 years. Yeah, these are 10-year notes. So this is a little more longer term, but you can see that has also come down from a high of around 4.5 to where today we closed Friday at like 3.71, if I'm reading that right. So that's good for consumers. Lower interest rates is good for consumers, good for companies wanting to borrow money to expand their businesses. Remember, interest is just what anybody pays for the use of money, including our government. So this should actually be good for our government too. As interest rates come down, that should lower our debt burden. But if they keep spending money like crazy, it's not going to matter. As that stuff comes down, we that causes bonds to go up, and that's why you're seeing this movement up in this ETF of bonds, symbol TLT. So as interest rates come down, that's favorable for bond prices to go up. It's just an inverse relationship. That's the way it is. And but that's why I wanted to discuss about interest rates and inflation. So even though inflation has come down, it's still there. We're still feeling it at the pump. Gas prices, grocery prices. It's just the rate of inflation has slowed. So that is overall a good thing, I think. What else can we look at? I think that's about it for this month. If you guys have any questions, we could look at oil. Oil has been selling off too, I believe. Oil's kind of come down. So that's also good for the consumer if oil prices come down. Pharmaceuticals, I believe that. XPH is a pharmaceutical ETF. So that has been kind of in the short term 2-month uptrend. So because that's more of a healthcare related ETF. These two are interesting to track too. This total market stock market ETFs. This is from Vanguard, VTI. This is a good general one to watch too. Good general overall indicator of the stock market. It's broad based. So you can see generally this year it's been in this uptrend. And long term for investors, it's been in a nice long term uptrend here. So we had this pullback in 22, and then the overall market just resumed its uptrend. So that's one I like to watch. Also, this is another, just a different company. This is from Schwab, symbol SCHB, US Broad Market ETF. Very similar looking chart to VTI. Okay, so that's what I use to gauge the economy and my investments. Again, long term, the stock market has generally gone up as an investment. So I don't have any real good ideas for this month. One thing I want to talk about too, okay, if you're looking for an investment, I mentioned like UPS, 3M, AT&T, that'd be three big companies, more value type companies right now, but sometimes in this type of stock market environment where it's going back and forth month to month, sometimes it's not a great trading environment. In fact, when I look through these charts, I see very few opportunities in the big growth companies like Google, downtrend, Uber, selling off this, last couple weeks versus previous month, it was rocketing higher, and the month before that, it was selling off. Sometimes it's just not a good time to trade. And so sometimes you have to pick your opportunities where stuff kind of comes together, whether that's growth and value, whether that's the charts look better. Right now, the charts just don't look that great. And so it's okay sometimes to wait where there's a better opportunity to buy. I think right now AT&T looks like that's pretty decent. Was a decent opportunity, especially right here. And then we had that breakout candle on this date back on September 3rd. So that is one that's kind of on its own page right now. But most of these other companies are not. The charts just don't look very good. And it's okay to do what's called sit on your hands, or SOH, when opportunities are not there. Here's this, like this communication sector is under pressure right now. Not a great opportunity right now in communications. Or here's a semiconductor company, AMSC. Not a great time right now AMSC in a downtrend. So sometimes it's just not the right time to jump in, and you just have to wait. So if you're a trader, just swing trader, it's okay to wait right now till there's some better opportunities to enter. So that was another message I want to give you guys this month. Anyway, enough about me. Let's wrap this up. And again, here's my contact info. If you need anything, laptoptraderphil@gmail.com. And yeah, I guess we'll see you next month in October. And good luck to you. That's all. Bye.